Hello everyone, welcome to Excellence IAS Academy. In this video, we'll discuss about Monetary Policy Committee as well as Repo Rate. Recently, Monetary Policy Committee headed by RBI Governor reduced the Repo Rate by 25 basis points. In this context, we'll discuss about monetary policy as well as also Repo Rate. Let us begin. The Monetary Policy Committee will be constituted by the central government. It is a 6-member body. 6-member body. Central government constitute this 6-member body under the section of 45 ZB of the RBI Act of 1934. This section 45 ZB was inserted in this Act of 1934 in 2016 through Finance Act. This section gives the central government the power to constitute MPC. The MPC, as we already noted, a 6-member body. These 6 members are from 3 members from RBI and 3 members from the representative of the central government. 3 members from the RBI are include RBI governor and the RBI deputy governor. This deputy governor who is in charge of the monetary policy, and another RBI official. This official, RBI official, is appointed by RBI board itself, RBI board, and other 3 members are appointed by the central government. These are our 3 members are representative of the central government in Monetary Policy Committee. These 3 members are appointed for 4 years. These 3 members are appointed for the 4 years. This Monetary Policy Committee is entrusted with the responsibility of inflation control. Inflation control means the Monetary Policy Committee changes the policy rate to control the inflation in the country. This inflation control will be within the range of 4% plus or minus 2. Means the inflation will be controlled within the range of 2 to 6%. This Monetary Policy Committee meets 4 times a year. 4 times a year. Whenever this Monetary Policy Committee meets, there is a quorum. What is the quorum? Quorum is 4 members. Means there should be at least 4 members to meet and discuss any policy decision. Whenever there is a meeting, the decisions are taken with the majority voting. Majority voting. Every member will have a equal voting. If there is any tie in the case of, for example, if there is 2 are decision whether the policy rate should be increased or decreased. If in that case, if there are 4 members in the meeting, if the votes are split in 2 and 2, in that condition, the RBI governor, who is the chairman also of this committee, has a casting vote. Whichever side he votes, that side will be the majority wins. If the governor votes in favor of the policy rate cuts, there will be a majority with respect to rate cut. This decision is binding on the RBI. Means the decision taken by the Monetary Policy Committee is binding on RBI. RBI should implement that decision. This is with respect to Monetary Policy Committee. Recently, we noted that already. Recently, Monetary Policy Committee lowered the repo rate, are also called policy rate. Policy rate. Lowered the policy rate by 25 basis points. But what is repo rate is the first? Repo rate. The repo rate is a policy rate at which the RBI lends the commercial banks. Commercial banks. Means whenever there is a lending from the RBI to commercial banks, it charges some interest. This is called repo rate. Means whenever RBI want to control inflation in the market, it increases the repo rate. Means whenever there will be increase in the repo rate, banks don't borrow money or borrow less from the RBI because interest rate is high. In this condition, commercial banks also lends money with the high interest rate. High interest rate because RBI imposing higher interest rate on commercial banks. Because of that, commercial banks are also imposing higher interest rate on consumers, means borrowers in the market. Because of this, borrowers don't borrow from the commercial banks, in that case, there will be a less demand in the market. Less demand in the market. In that condition, what happens? There will be a less inflation in the market as well. Less inflation. But whenever the RBI lowers the interest rate, means lowers the repo rate, in that condition, what happens? The commercial banks borrow more money from the RBI because they don't want to keep that money with the RBI. Why? Because RBI paying less interest for that particular money which has been deposited by commercial banks with the RBI. Because of that, commercial banks in that case borrows more money from the RBI because the bank rate, means the repo rate is very low. In this case, what happens? The RBI lends the consumers with a low interest rate, right? Here is the high interest rate, here is the lower interest rate. In that case, what happens? There will be a cheaper loans in the market. Cheaper loans in the market. In that conditions, borrowers in the market will borrow more money from the commercial banks. Hence, there will be a more demand in the market, right? When there is a more demand in the market for the commodities, there will be a more production in the market. When there is a cheaper loan, there will be a more investment as well in the market. More investment. When there is more investment, there will be a more employment generation as well in the market. Employment generation, more investment, again there will be a more demand. The more demand means more employment, more demand, more investment means growth in the economy. Means whenever there is a cut in the repo rate, RBI also aiming at inflation control but also try to promote the growth in the Indian economy. Hope you got the idea what I am talking about here. In that condition, recently RBI also reduced the repo rate by 25 basis points. Means RBI giving in here that it wants to promote growth in the economy as well. So thank you for watching the video.